You know, in the world of healthcare, you've got the giants everyone knows. But then there are the hidden titans, the companies that make the entire system run. Today, we are pulling back the curtain on one of the biggest of them all, McKesson. And when I say big, I mean just look at that number. That's McKesson's revenue for fiscal year 2025, $359 billion. That's a number that rivals the entire economy of some countries, and yet most of us have probably never even thought about them.
So that's the big question, right? How does a company this massive stay so completely under the radar? What on earth are they doing to make all that money? Well, that's exactly what we're going to break down.
Honestly, this is the perfect way to think about it. McKesson is like the veins and arteries of healthcare. They don't invent the drugs, they don't treat the patients, but they are the absolutely critical link that gets medicines and supplies from the manufacturer to pretty much every pharmacy, clinic, and hospital you can imagine.
So let's pop the hood on this thing. Let's really dive into their core business machine and see how it all works and what really drives those unbelievable revenues.
What's really wild here is just how dominant one single part of their business is. As you can see, North American pharmaceutical distribution, it isn't just part of their business, it basically is their business. We're talking over 90% of their revenue. It is an absolute behemoth. But the story isn't just about that one massive core engine. McKesson really has this two-pronged approach. On one side, you've got the stable, foundational business of U.S. pharma distribution. But on the other, you have their high-octane growth engine, oncology care. This area is exploding because we're talking about complex, life-saving drugs that are way more profitable. This is where McKesson sees its future. And to pour more fuel on that high-growth fire, they're making a really savvy move. By planning to spin off their lower-margin medical supplies business, they're sharpening their focus squarely on the most profitable, fastest-growing parts of the market. So what does that future actually look like? This brings us to the next key piece of the puzzle, the specific strategies and the powerful trends that are getting ready to fuel McKesson's growth for years to come. You know, the company has laid out a super clear three-part game plan. First, go all in on high-value areas like cancer care. Second, streamline the business, get rid of the less profitable stuff. And third, just ride the powerful waves of some major healthcare trends. And believe me, those trends are huge. We're talking massive demographic shifts. Aging populations and the rise of chronic diseases mean more and more demand for the very drugs McKesson distributes. And on top of all that, they're gobbling up smaller companies to get an even stronger grip on that specialty care market. And what does all of this strategy, all of these powerful tailwinds actually translate to? Confidence. Pure confidence. And look, this isn't just some analyst guessing. This is the company's own management team telling investors, hey, we expect to grow our earnings by a massive 12 to 14% every single year. Okay, so the business model is solid. The growth story is really compelling. But a great story has to be backed up by strong numbers, right? So for anyone wondering if this is a healthy company from an investment point of view, let's just run through a quick investor checklist. First up, what about shareholder returns? Well, McKesson has a really remarkable track record here. They've been paying dividends for over 30 years. And even better, they've increased that dividend for 18 straight years. That kind of consistency is just incredible. So, can they keep it up? Well, this slide right here says, oh yeah. Their dividend payout ratio, which is just the slice of their profits they give back to shareholders, is incredibly low. At just 9 to 10%, it means that dividend is super safe and has a huge runway for future growth. Now, what about the stock's price? Is it a good deal? Well, a common way to look at this is the PE ratio, which is kind of like the price tag on a stock relative to its profits. Looking backward, its valuation seems pretty normal, but when you look forward and you factor in that amazing growth we just talked about, suddenly that price tag starts to look a whole lot more attractive. And it seems like Wall Street agrees. This chart shows what the professional analysts think the stock will be worth in about a year. You can see the average target suggests some pretty healthy potential upside, and some think it could climb even higher. So, after digging into the business, the growth strategy, and the financials, where does that leave us? What's the complete picture here? Okay, let's put it all together. On one side, you have an essential, almost recession-proof business that executes flawlessly, is smartly moving into more profitable areas, and really rewards its shareholders. But on the other side, you've got the risks that always come with playing in the healthcare sandbox: regulation, pricing pressure, and of course politics.
It's a balanced picture, for sure, but the strengths are really clear and really significant.
And that leaves us with one last thing to think about. McKesson's business isn't flashy. It's about logistics, efficiency, reliability. It's about making a ridiculously complex system work, day in and day out. So as you think about what comes next, it's worth asking, in a world that just keeps getting more complicated, maybe the most valuable thing you can do is simply ensure the essential things still work.